Ladies and gentlemen, between Supreme Court victories and, unfortunately, a stock market crash, Trump has cemented, I believe he's cemented a November victory. He will be the next president, especially if and when this market crash continues and it gets a lot worse. I've been predicting a stock market crash for a long time now. Hit subscribe to this channel. We'll get to the Supreme Court presidential immunity victory that I predicted as well. Business Insider, Amazon says shoppers are getting more cautious about spending. By the way, we'll talk about Amazon's after-hours market tanking also on the stock market crash channel. The link will be in the description of this channel. I just did a live stream, obviously here and also there. I'll do another live stream right after this one, so please go ahead and catch that live stream. It's in the description section of this live stream. And what can I tell you? Yahoo Finance, Amazon stock tumbles on weaker than expected sales outlook. Not only is there weaker than expected sales outlook, but Fox Business credit card debt poised to smash another record high. We have over $1.13 trillion in credit card debt. That's been fueling consumer spending for several years now. We've had record highs in credit card debt. We had high inflation, high interest rates. And with Trump, we didn't have any of these problems. Okay, it all started, and I wrote about this in the Federalist, and you'll hear from some analysis in a second. But I wrote about in the Federalist about a year and a half, 2 years ago, I said, we're heading towards a stock market crash because of the policies of Biden and Harris. And you can go to hagoodman.com, read that article. You could just type in H.A. Goodman, Federalist, and Google it. And you can see I talked about the specific policies, in large part, specifically, shutting down economic activity, pumping trillions in stimulus, flooding the country full of strategic petroleum reserves, pretending inflation wasn't an issue, letting it go to 9%, and then raising interest rates to lower inflation, and then all the other problems we had in terms of geopolitics under Biden and Harris's presidency have been an unmitigated disaster. Anyway, let's continue. I do believe if you look at look, the market could go up tomorrow. It's completely counterintuitive day by day. I do think there's going to be a major stock market, Bitcoin, crypto crash before November that will cement, unfortunately it'll happen, but that will cement Trump's victory. Even all of media working in unison to anoint the vice president, just like they did 4 years ago with the current incumbent who actually won his primary. Even that's not going to be enough. They ousted Biden for Harris, and then the stock market crashes as a result of their failed economic policies. Hit subscribe. Be here also on the stock market crash channel, different channel. It's another one of my channels. Started it because I knew there would be a stock market crash, and I'm going to build it. Be there for the live stream in about half hour or so. This isn't going to be a long live stream, but let's continue.
Hypocrisy on full display today as Treasury Secretary Janet Yellen joins potential Harris VP pick Governor Josh Shapiro in the battleground state of Pennsylvania to tout the Biden-Harris tax plan and IRS investments. But never forget when she preached about the importance of keeping the financial institutions separate from politics.
Every household making less than $400,000 will not see an increase in their tax bills.
That was not the old piece of sound where she was preaching. That was her regurgitating the garbage promise out of the Biden-Harris administration. Joining us now, former Council of Economic Advisors Chair Kevin Hassett. In that McCain speech that she made, I will point out, Kevin, great to see you as always, she said, when we took office in the depths of the recession brought on by the pandemic, President Biden went big at the time of a national emergency. The economy was growing at more than 4% when they took office, and they blew out to $35 trillion in debt. That's where we stand right now.
I can remember being on with you when I was in the White House, and I don't think you ever felt like I was reciting talking points, right? I mean, but if you look at these people, they're all like calling J.D. Vance weird, and they're all like saying the same things, but they're not using their brains. And so if you look at Janet Yellen, I can't tell you how disappointing it is, because the Treasury itself, their staff says, for example, that about 30% of the corporate tax is borne by workers. So if you raise the corporate tax, their wages go down. They're proposing a big corporate tax increase, and that's going to be borne 30% by her own professional staff, 30% by workers, and she's saying they're not going to pay more taxes.
Amazon itself is basically an economic indicator now. It's tanking after hours. Again, I don't want people to lose money. I don't want a crypto crash. I don't have any money in crypto, Bitcoin, or the stock market, stocks. I don't even have money in mutual funds. But everybody I know has money, in these things, and I don't want anyone to lose money. However, Biden's policies, wanting to tax corporations when you have high interest rates, high inflation, record highs in credit card debt, and an economic environment where even Amazon is saying, yeah, it's tough ahead. It's tough going ahead. Amazon is basically at this point an economic indicator. And if their earnings or if their stock is tanking, doesn't look good for tomorrow, but I think a stock market crash, ladies and gentlemen, is here. That is going to cement a Trump victory. Again, I don't want a stock market crash, but it will cement a Trump victory.
It's just preposterous. And I just don't know, where these people find the gumption to go out there and be so partisan, but also to reveal themselves as not using their brains. And I guess, again, I'm very disappointed in Janet. I never expected that she would be this person who's just out there spewing propaganda for the Democrats and ignoring economic science.
Well, it's
Yellen also stated that the inflation was temporary, but then it went, straight up to 9%. It soared to 9%. Then they raised interest rates. See, they raised interest rates. The Fed funds rate was a tiny fraction of what it was now. It's now at 5.2, 5.5%. But it's a tiny fraction of what it was. I think it's 5.25%. Okay, inflation was a tiny fraction of what it was when Trump left office. Okay, less than 2%. Now it's over 3%, but food prices have increased 25 or 26, 27% since Trump left office. So they were saying, Yellen and others were saying that it was temporary. It was never temporary. That's why they flooded the country full of strategic petroleum reserves. That's why they ousted Biden, because his economy stinks.
kind of amazing. I don't even remember the last time I saw a U.S. Treasury Secretary out on the campaign trail so openly campaigning for the president.
Yeah. Yeah, and somebody should ask her when's the last time she talked to the president. Because what I want to know is that these people haven't had a cabinet meeting since last fall. If I'm in the cabinet, part of my responsibility is to make sure that the president is sentient and able to do his job, right? Because you might have to vote him out if he can't. And as far as I know, these people haven't met with him since like Thanksgiving. And so if you wonder why the economy is running afoul of economics and inflation is taking off and staying high, it's because these people are just spewing political partisan talking points. They're not actually advocating good policies. And it's very, very sad to see Janet Yellen out there doing this. And politicking like that, campaigning, it's very unbecoming a Treasury Secretary.
Well, allow me to serve up some more politicking for you. I mentioned the U.S. debt, the national debt, surging past $35 trillion for the very first time in the nation's history.
So we have the Supreme Court victories overturning the Colorado ban and the presidential immunity victory for official acts. Ending someone's life is not an official act. So Democrats had it completely backwards. And, a lot of Hollywood celebrities believed complete nonsense. It was for official acts. But Judith, thank you so very much. Judith Gurian, thank you. Rob, thank you. Judith, thank you so very, very, very much. Greatly, greatly, greatly appreciated. And to my super chat, thank you. U.S. debt hits new record, $35 trillion. We have household debt, credit card debt reaching a record over $1 trillion. And just now, Amazon came out. I think this is the beginning of the market crash that I have been talking about for years, ladies and gentlemen. About 2 years I've been saying we're going to have a terrible market crash. And it's because of Biden's policies. And I wrote about it also in the Federalist.
And no surprise, here is the White House blaming, you got it, Republicans.
The prior administration increased the debt. Let's not forget what the prior administration did by a record $8 trillion.
Whenever Democrats or anyone say Trump increased the debt, it was Democratic governors who shut down their state economies gleefully and kept the economy shut down until Biden took office. What did people expect Trump was going to do? Actually, he couldn't do anything. Congress decided to pass stimulus checks, fiscal stimulus. What was he going to do? Veto it as people couldn't work? So, of course, it's so disingenuous. It's unbelievable. The fuel, the impetus, the reason that our economy went from record low poverty, record highs in household median income to suddenly major states, blue states, shutting down economic activity was because bureaucrats, media, Democrats pushed to shut down the economy. What was Trump supposed to do? Not give any stimulus, veto stimulus bills?
And didn't sign a single law to reduce the debt deficit. And that's what we're dealing with right now. And on top of that, you have congressional Republicans that to continue to want to blow up the debt, again, with $5 trillion more in Trump tax cuts. So the president has taken action.
Democrats kept the Trump's tax cuts. They also kept Trump's tariffs.
To try and lower the deficit, and Republicans want to balloon that.
She just said lower the deficit. The Treasury just reported that the U.S. is going to borrow $1.3 trillion more before this year is out. They're running a $2 trillion deficit right now when the economy's growing.
You know, the most astonishing thing is that they're like talking about the Trump tax cuts, but we just heard Janet Yellen say that if you make below $400,000, then you're going to get your tax cut. If you look at where all the cost of the tax cut is, it's in the tax cuts to individuals with incomes below $400,000. And so the big number that they keep using to scare people about the Trump tax cuts, maybe 85 or 90% of that number is what they're proposing, and they just ignore that. Like, the facts are completely irrelevant. And it's astonishing, too, that the White House press corps that covered for Joe Biden will let her get away with something like that. If I got a number slightly wrong, then I was getting Pinocchios before I got back to my office. And here they're allowing her to sort of say, oh, we're ballooning the deficit with this massive tax cut. And then they're proposing something that's almost the same size. It's just ridiculous.
I want to shift gears here, Kevin. Turns out the country's post-COVID factory boom is taking a huge hit under Biden, with manufacturers laying off employees and cutting production to combat high interest rates and rising operating costs.
So Democrats kept Trump's tax cuts. They could have done away with them before they expired in 25. I mean, the hypocrisy is unbelievable.
In the latest jobs report, manufacturing jobs decreased by 8,000 and have only grown by 0.1% since last year. So what's going on here?
Right. Well, it's actually a little bit worse, too, because all of the jobs that are being created in the economy are going to illegal aliens, too, if you look at the BLS data on that. And so the people who are native-born Americans, when Joe Biden took office, there are fewer of them working across the whole economy, way more in manufacturing. There are fewer of them working now than were working when he took office. And so the astonishing thing about the Biden administration, though, is that they don't actually have messages based on facts, right? And so they just ignore the bad facts, but they don't have good facts. And I can remember that we had this memo when I was at the Council of Economic Advisors that we sent around to everybody in the White House, and we called them the braggy points, which are just the good things to talk about if you have to talk about the economy. I'm also disappointed that they don't find something substantive to talk about. Instead, they just lie about stuff and make partisan talking points.
It's hard to break that habit, Kevin, when that's all you know.
Then there's a commercial real estate problem that could lead to banks, smaller banks, going under. We have a recession on the horizon, a stock market crash that I think we're seeing in real time, the beginning of. Again, the market could go up tomorrow. It's like, you never know. It's completely counterintuitive, but the foundation, the shaky, unstable foundation of this economy, we're seeing it play out in real time in the stock market. And again, that is, forget the polls. Forget any of the polls, because Trump's up in every poll. But, media is like, oh, Harris is almost tied with Trump. It's like, well, but she was polling below Biden. How did that work? How did that work in like 2 weeks? The major, foreshadowing of November is the stock market. If we have a stock market crash, which I think we're seeing, cements Trump's victory. Basically guarantees his victory.
Let's bring in the head of global events and research at Wall Street Horizons, ATMAX company, Christine Short, along with Heritage Capital President Paul Schatz. All right, Paul, I'll start with you. I get all the top economists. They come on the show, and every one of them is like, the consumer is strong. And it just frustrates me because they always look at aggregate data. And yeah, the top 25% is strong as hell, but the bottom 75% are weak and getting weaker. And now it's I tell you what bothers me. It's reflected, in some of these things we're seeing, like what Lydia just talked about, but also in policy. When the Fed talks about policy adjustments and things like that.
Look, I heard Nike was a one-off. I heard Starbucks was a one-off. I heard Helen of Troy was idiosyncratic problems. But that's what happened. They all add up, and you've got, I don't know what number it is, the bottom 25, 15, 30, I don't know. We know that credit card delinquencies are up. We know that auto delinquencies are up. The consumer and these stocks like Delta, I think they were, even though they were lagging, they were still priced for perfection with no margin for error. So now, look, you've got the travel and leisure is, I will say, a little under pressure. The consumer brands are a little under pressure. The industrials and the material stocks aren't trading so hot either. So clearly, there's something percolating beneath the surface. And I think it's going to bear itself out in the unemployment numbers.
Really? Well, that's what Jay Powell talked about the last 48 hours, that his focus is less on inflation now, and to your point, a shock to the labor system, labor market. Christine, what do you think? I mean, you know about all of this and everything that's going on in this economy.
It wasn't until recently that real wages were up. Real wages for most of Biden's tenure have been down. Okay, wages they keep saying, well, wages are increasing. Like, well, wages were increasing, but not as fast as inflation. That's a problem.
Where do you think the consumer is? Because that obviously is 2/3 of the economy.
Yeah, we've talked a lot about the consumer being resilient, right? I don't know if I would say strong, but they were resilient in the face of high inflation. Right now, we're starting to see that wear a bit. It's coming down. We've talked a lot about the dollar stores, and we've seen this as a great benefit to Walmart as consumers trade down, even at the higher end.
And
trade
even
down
Costco,
to Walmart.
right? They announced
Costco,
a price increase last night, and the stock opened up strong, but they can pull it off. They've got the right business model right for this, right?
Same with Walmart. I mean, a large portion of their business is groceries. That's why you're seeing Walmart favored in this environment and not Target, which is, a peer in the space. And so we are seeing a softening of the consumer. You mentioned jobs. That's the most highly correlated with consumer spending and how willing they are to.
And now Amazon is tanking. So again, Amazon is such a large company. Walmart too. Not a while back, talked about an economic environment that was going to be tough. So these are kind of like economic indicators in the country and in the world, really.
To spend their discretionary income is how secure they feel in their jobs. We saw unemployment tick up, last week when we had jobs reported on Friday. Non-farm payrolls did come in stronger than expected, but they fell over the prior month. And so you're starting to see a softening in the labor market. It's taking longer for people to find jobs. And so because of that, they're pulling back a little bit with their spending.
They didn't fall. They were revised. They were down in the first place, and they're probably going to be lower than we thought they were. And by the way, only 136,000 private sector jobs. And this is what bothers me and I'm concerned about with the Federal Reserve. And I'll bring it back up because, listen, all eyes are always on Jay Powell. Where are you with respect to when do you think they should start cutting?
Should or will, two different things. The whites of the eyes, so first of all, I think Powell did a great job this week, and I'm no fan of the Fed. I've been critical of Jay and his predecessors.
He was kind of swatting them away this week.
I think he did a really good job, especially with Warren. I think he did a really good job, and he pushed back when he needed to push back. I think the problem is almost whatever the Fed's going to do now, they've gone too far. It's probably too late. You're right, unemployment's 4%. Once it doesn't go below 4 for a couple of months, the genie's out of the bottle. Maybe we're heading towards zero growth, possibly negative growth. But I think the Fed's I think they will start in September. Should they start in September is a different story, but I think they will start in September.
We're seeing a lot of people are saying, okay, 4.1 is not a big number, but the pace of it going up. You mentioned it was already a surprise. The pace is, going up a little bit almost every time these reports come out. Where do you see the Fed taking action?
Yeah, I mean, look, the consensus is for September, right? And so I believe after the remarks the last few days that that's likely to happen. I think that's where 80% of the probability is.
If he lowers interest rates in September and we have a market crash before then, it's not going to matter. Furthermore, you're lowering interest rates, but then inflation's going to go up. So I don't understand how that works from a political sense. Because, are they saying, well, the average American isn't going to feel the inflation that increases from the September rate reduction before November? I don't understand the economic or political calculus.
But you're right. Once the momentum starts heading in that direction, it gets hard to stop. And now that we're over 4%, wage growth's come down a bit.
And Powell acknowledged that the last 2 days, too, that they understand, they're not going to wait. They're going to go to where the puck is heading, we hope. All right, I got to ask you about the bank earnings tomorrow because we'll learn more about the consumer.
So, ladies and gentlemen, the funny thing is, the more they talk about Harris winning, the worse it is for the stock market because they don't want corporate taxes. And corporate taxes not going to help. Corporate taxes won't help anyone. It will hurt the working class, the Democrats and liberals and progressives claim to care about. The working class did better under Trump than under President Obama or Biden. So or even Bush and Clinton. The working class, we had record low poverty with low interest rates and low inflation. And record highs in household median income. We didn't have record highs in credit card debt. We didn't need to have record highs in credit card debt. Let's continue.
All right, folks, let's face it. Real people are in real trouble. When I was growing up as a kid in Harlem, McDonald's was a periodic treat. I'm telling you, for lower income households, it's becoming that way again. And yet the Federal Reserve probably doesn't even know about it. Maybe they don't care because economists always use an aggregated data, right? They put everybody in the same pot and say we're too strong. It stands to reason, though, that if Mickey D's is hurting and Coca-Cola is hurting and Starbucks is hurting, then maybe we're in a lot of trouble. Take a look at Starbucks. This is what
in Biden's America, McDonald's for a family of 4, a family of 5 is like $50-$60 in some cases. That's a lot of money for McDonald's. I mean, that's an obscene amount of money for McDonald's.
What's intriguing for me, same store sales were down 3%, transactions down 7%. So yeah, they raised prices, but it was not enough, right? So this is the problem. If you did go there and you were barely making it, the stuff costs more, but people are on guard there. Remember yesterday, that consumer confidence number, all of this feeds into this. And I have to bring this up again because if you look at this is the expectations. It is falling off a cliff. Look how far back you have to go. We haven't felt this worried in a whole long time. Let's bring in heritage economist Peter St. Peter, there are two Americas, right? And one is getting pounded while the other one is getting richer. And why doesn't the Fed factor that into their decision making?
Yeah, absolutely right. They work with aggregated numbers. They're looking at the economy overall. This is the essence of central planning. And once you dig into the numbers, that's always where the tragedies are. So as you mentioned, the poor are cutting back on Coke and McDonald's. Meanwhile, Molson Coors, they just came out. They said that things are going great. They've got a lot of growth in the pricier beers as consumers treat themselves.
So this gentleman is correct. What takes place, Democrats and media, it's not the first time they've completely utilized aggregate numbers in a deceptive manner. Okay, you can look at aggregate numbers, say, oh, crime's down, yeah, but assaults are up. And they say, oh, well, wages are rising, yeah, but real wages are down. The real wages are not rising as fast as inflation. Then you could say consumer spending's doing really well. Well, yeah, we have record highs in credit card debt, and you flooded the country full of strategic petroleum reserves. Nah. Well, inflation's taken care of, yeah, but you raised interest rates and also the strategic petroleum reserves, and you begged other countries for oil. So the Democratic Party's economic policies are not only abysmal, there's no vision. It's like adhere to ideology, and then when the ideology doesn't work, beg other countries for oil and release strategic petroleum reserves, then pontificate about the environment again.
So you've really got this K-shaped economy where you've got a lot of cash at the top. People have tons of money. You got the TikTok videos of people, sitting on the beach in Bali enjoying it. And then you've got a lot of pain for the rest of people who are struggling to keep up with inflation, really.
So, and it's ironic because, these folks who have the money, in part because they have assets that make more money at higher rates, are spending it, and that adds to the inflation equation. So, hotels are doing phenomenal, casinos are doing phenomenal. We know that. Yep. So, where do you see inflation? How do we get inflation down? Because when inflation reared its ugly head initially, everyone said it cures itself. Higher prices are the cure for inflation. Well, that was about 4 or 5 years ago, at least 3 years ago.
Yeah, there's been a long transitory inflation here. It's been a couple of years now. And in fact, it looks like it's reaccelerating. So that is really the big concern. We had this stagflationary read just about a week ago here, where we've got a slowing economy. We've got inflation taking off again. And the problem there is that, the way that inflation enters the economy, the Fed does not have helicopters that it dumps money out of. The way that it brings money into the economy is pumping into the financial markets. And they hope that it trickles down, but that takes a long time. The people who first get the money, right, you have stocks soar, corporate valuations soar, housing soars.
And the yield curves are inverted. The 2-year is higher than the 10-year, which means that people don't want to take a long-term bet on the U.S. economy. They just want a short-term place to keep their money. That's bad. You should want investors and countries to have a long-term view. Say, 10 years is a great, the U.S. is a great place to put your money for 10 years as opposed to 2 years. You want a better outlook than just a short-term outlook.
Of course. And then years later, right, you had some numbers on wages finally starting to catch up. Years later, it trickles down to everybody else. But in the meantime, they've been dealing with the inflation. Right. So really, the way to fix this, the way to fix a lot of problems in our economy right now is to get down the government spending. Right. Biden is proposing $7.3 trillion now. That would be almost $3 trillion up from what Trump was putting out there pre-COVID. So that's $3 trillion in about 5 years there. And not only is that bringing in all these new taxes, we're talking about 45% rate on the capital gains. They're floating this unrealized capital gains tax, which would be absolutely insane. But beyond that, that is what's keeping the inflation going. It's what's putting the Fed into this no-win situation with inflation accelerating, even as you mentioned consumer spending is dropping off.
And Peter, before I let you go, I want to make a point with you and the audience, because you've made this point before. Because of so much government spending, they are pushing out the private sector. In a JOLTS report, we saw it there. The only area in JOLTS that gained jobs or job looking are the government. And yesterday in ECI, you should see how much workers for government are getting paid. And then today we got construction spending, private construction. How bad are they pushing them out? Single homes down, multifamily homes down, lodging down, office down. The only thing that was out was amusement parks. Folks, if the government is sucking up all the oxygen and the money in the room, there's nothing left for the private sector. Peter, my friend, thank you so much.
Ladies and gentlemen, Amazon stock is tumbling after hours. Why is that important? Usually I just talk about the Supreme Court, and the Supreme Court and the stock market are going to be the two reasons that Trump cruises to victory. The stock market crash that I've been saying is going to happen, I think is finally happening. Again, I'm not gleeful. I don't want it to happen. I'm actually hope I'm wrong because a lot of people are going to lose a lot of money. But if you subscribe to the Democratic Party philosophy, if you don't listen to them, you deserved it. So I'm not going to be a morally superior, highly educated liberal Democrat and say, if you lost your retirement savings and you voted Democrat, well then. That's the very petulant, wonderful, highly educated liberal mentality. On a lot of things, we don't have to talk about the despicable, sinister viewpoints from 4 years ago. If you don't do this and this happens, but people voted for this economic policy. I mean, you had a choice between mean tweets and a great economy and wonderful economy, or the same political party that pushed to shut down economic activity. You gave the keys to the car to these people, and they didn't even trust Biden at the end of the day. They ousted Biden after he won his primary. Anyway, I do believe, even if the market goes up tomorrow, which I can't imagine it will, I do believe we're in the beginning of the market crash. Again, that is going to cement Trump's victory, but it's going to come at a terrible economic cost to the country because of Democrats' mismanagement. Hit subscribe. Go to a Stock Market Crash channel right now. I'll be there for a quick live stream to talk about this. This could be history in the making. Go to the Stock Market Crash channel. It's in the description section of this live stream. Hit subscribe here. Hit subscribe to the Stock Market Crash.